Welcome back. You're still tuned into Midcap Radar. Well, let's discuss an important update that came by yesterday. There's been a lot of exuberance in the SME space. SME stocks have been surging and their IPOs have received massive subscription in recent times. The table, of course, will come up for you on the screen in just a bit. Yesterday, market regulator SEBI put these under short-term additional surveillance measure, or ASM, and also extended trade-for-trade settlement for this. Earlier, it used to be the case for the main board stocks, but now it has been extended to SME segment as well. To discuss more about these developments and what could the impact be, we have with us Vineet Arora of Nav Capital and Gaurav Jain of Hem Securities joining us now as to what this would mean for the space as a whole. Would we continue to see the massive subscriptions of the massive interest that we are seeing, and what would margins look like post this implementation? Vineet is here with us right now. Vineet, good afternoon. Thank you so much for joining us. Well, you know, you've been investing in the SME space, but with this change that has come about, if you can just explain to our viewers as well, what would it mean for them if they are investing in the SME space? Would they have to pay higher margins, or would there be some impact in terms of the volatility that we've been seeing in the pricing?
Thank you so much. See, the sector is definitely buzzing, and we've seen some froth in the market, but I think these are very, very welcome measures to cut down the froth. Won't have much impact in the long run. Short term, yes, the speculation will go away, and which is very healthy for the markets. We've been expecting this for a while, and finally it came through. At least the genuine investors stay invested. I don't think too much of margin is available on SME, but yes, there are people who were taking margins, and it needed to be curtailed. Especially from a retail investor perspective, who's not very sophisticated, who does not know what's happening in the market. I think it was high time that these requirements came in.
Vineet, so you do acknowledge that there was some froth in the SME market, and this froth, it's a good thing that we are going to see it recede to some extent. You were expecting this move for a while. So, Vineet, can we expect some more measures, investor protection measures, from SEBI? So, for instance, SME IPOs are approved by the exchanges and not SEBI. So, do you think it's time that maybe SEBI will start also, stamping their approval on SME IPOs? Are we going to see more steps? And if yes, what form and shape could they take?
I don't think that should happen, because this as a segment is very, very important for Indian economy's growth. SMEs are the backbone of our economy, and and these are the companies who never had access to capital. Now, for a change, they have access to capital and they're able to grow along with the economy. So I think SEBI getting into these small IPOs would delay the process. NSE and BSE have done a fantastic job so far. The quality of companies which have been coming into the market last 4 or 5 years has actually been quite good. As with any market, with so many good apples, there'll be some bad apples. But in general, I think we've not even scratched the surface. There are about 600,000 SMEs in India, of which probably 50,000 could list. And we've just reached a number of about close to 1,000. So we have a long, long way to go for the sector to grow. I think we're just at the beginning of a long bull run in the sector, and the timing by SEBI to actually step in and curtail down the speculation was absolutely, just in time.
Vineet, just one follow-up question. What, according to you, led to the froth in the SME market?
I think the way the IPOs were listing with the bumper gains, 100%, 150%, retail investors get carried away and everybody starts applying. And suddenly you start seeing issues getting oversubscribed 400 times, 500 times. So a huge amount of FOMO got created where people were missing out, and that led to this mad rush.
Oh, yes. Look at some of the mad rush that we've seen. There's a very helpful table that has been provided to us as well by Gaurav. It says Kahan Packaging Limited received applications which were 1,102 times more than what was expected. There is Basilic Fly Studio where the subscriptions are 415 times. So definitely a lot of interest is what we are seeing there. But Gaurav, comment on this, because when we are talking about these measures coming in right now, do you think this would be enough to reduce the volatility that we saw? In terms of margins, would they have to pay more if stock prices move a certain way over a certain period of time? And also in terms of this particular segment as a whole, do you think the valuations across the board are really high, as Vineet was also mentioning?
Okay, there are a couple of things. First of all, we need to understand why there is a large euphoria that's being seen on the SME space. First of all, in case if you look at the overall primary segment, 10 lakhs to 20 lakh applications usually comes in any mainboard IPO, whereby you are investing almost 14,000, 15,000 rupees, translating into a 1,500 to 3,000 crores of investment by the retail investors. On the SME space, the lot size is around 1,20,000, 1,40,000. And even though a fraction of those people are investing, maybe from 1 lakh to 2 lakh application, you see 1,000, 2,000, 3,000 crores of investment being done from the retail participant. So in case if there is an IPO, as you just mentioned, of Kahan packaging, maybe a 6 crore IPO or maybe a 10, 20 crore IPO, because the overall subscription that's coming in on the SME space is 1,000, 2,000 crore, there is a euphoria that's largely being seen. What we largely feel now, because the entire SME pack, the overall market capitalization is 1,50,000 crores. Almost 800 plus companies have been listed. So in 2018, SEBI had probably enforced the ASM framework on the main board for small cap and mid cap companies. Because this is evolving, there is a larger retail participation here. It was a right time whereby proper measures are also being should be made applicable even on the SME space, so that only good companies, larger companies should perform over a period of time. In terms of investors are concerned, very shortly, volumes are going to dry up in short term. But at the very same time, because SME is a product for high risk appetite investors for long term, so all those investors probably who don't indulge into speculative activities and then who are there to invest for long term should overall benefit from this particular move.
Gaurav, how would you respond to the allegation that's been made that perhaps there is a bit of a nexus between the promoters and bankers in overinflating prices, resulting in this euphoria that we're seeing? How would you respond to that?
I feel really in case if, let me give you some perspective, we analyzed last 4 years companies, so almost 145 companies were listed on the main board. 75% of these companies are above their IPO price now. On the SME space, almost some 300 plus companies were listed in last 4 years time. Again, 75% companies are above their IPO price. So in case if there is whatever, in case if there is something like that, all these things are quite short-lived. In case if we look at the SME space for last 10, 12 years, almost 66% companies are trading above their IPO price. So on a large basis, we have seen that more or less on the main board, SME board, the returns have been, the overall returns have been same. So I feel that is one of the reasons why we have seen participations coming in from the retailers. Now in terms of Nexus that you have been talking to, so largely, we have been active on the SME space for last 10 years time. This is most of the IPOs that as AIM Securities we would have brought, it would be at 8 multiple, 10 multiple, 12 multiple on the probably profit levels, whereby probably we see a 20, 30, 40 multiples being given on the main board. So I feel probably you'll always have bad players, good players in the market. So in the entire bucket, what investors largely has to see is good SME stocks and they need to do some sort of digging in terms of reading the prospectus. Risk factors are given. They need to take advice of their advisors. It's not probably you just can't go with the herd that yes, there is a euphoria, things can happen in the best way possible, and then you invest. So I feel that's most important part, that in case if your stock selection is good and everything, then probably SME space unlike rather startups, whereby probably we have seen that India has now emerged as the third largest ecosystem for startups, and India having largest number of SMEs again. So probably this probably things would evolve only. But very importantly, investors may have to look at great quality companies with rightful earnings. So with this new frame coming in,
Yeah. So, Gaurav, we take your point. Vineet, I wanted to come in on that because I was just looking at your portfolio as well. You do have investments in a lot of these SME companies. You intend to deploy 500 crore rupees in SMEs over the next 1 year as well, is what your note also suggests. But when it comes to analyzing these companies, it is for risk takers. But for most of our viewers who are watching us right now, we also want to understand some of the major risk factors, because when you analyze an SME company, most of their balance sheets as well, you would see working capital problems, you would see debt problems. In that case, how do you look at this space? And in terms of valuations, where do they stand right now across the board? Vineet?
If you look in terms of course, there are risks in the SME, as Gaurav pointed out, it's a high risk segment. But we need to understand that these companies never had capital. For the first time, they've got capital now, and they need time to either do capex, hire more people, to set up a new plant. So you need to give them time for them to grow. And then you will see a hockey stick group because the base is very, very small. The way I look at these companies, I redefine PE not as a traditional PE, but as promoter and entrepreneur. There are only two factors important in this segment. It's promoter, entrepreneur, or like we say in real estate, it's location, location, location. Here it's promoter, promoter, promoter. So you need to find the right people who are committed to the business in a high growth industry. If the company is growing at 15-20% without the capital, you have to look at, if they get capital, what is the growth trajectory going to be? And you kind of stay involved with the company for a long time. When we invest in a company, we'll typically take a 3 to 4 year call. Whatever we've bought over the last year and a half, we've hardly sold anything. For a simple reason, you need to give them time. Balance sheet investing happens at 3,000, 4,000 crores. Here, more than the balance sheet, you need to look at the business, the people running the business, how long they've been running it,
sure.
It's generation, second generation, etc.
Unfortunately, that information is not very transparent, Vineet, for a retail investor to make that kind of assessment about the fundamentals of the company. But Gaurav, coming back to that earlier point that we were making about a possible Nexus modus operandi, which is what the worry is in the market right now, which is why SEBI's also stepped in. Does Haim Securities also run an investment book in which they buy shares of the SME IPO when they are bankers to it?
Okay, so as in case if you are, SEBI has mandated every merchant banker operating on the SME space to undertake market making, whereby it's an official process whereby for next 2 to 3 years time, once you list the company on the SME space, you have to officially do market making for all these SME stocks to provide liquidity largely on these stocks. And that's the basic reason in terms of as a market maker, what an investment banker has to actually probably ensure. So we give two-way quotes. The rule is 75% of time of the market every day for 2 to 3 years time, you have to provide two-way quotes. And that's what probably is the process of market making. And every merchant banker operating on the SME space is mandatory required to do so.
Okay. All right, gentlemen, it has been a very interesting and insightful discussion. Thank you so much for joining us and putting the spotlight on the broader markets, or the SME market, so to say. A lot of updates happening there, and it's important to understand the risk associated with SME investing as well, because there's been a lot of euphoria, as our guests were mentioning as well. We'll slip into a short break. When we come back, we'll discuss more markets and stock-specific action. Stay tuned.